the first journal entry, similar to the schedule of goods manufactured, let's take that same process flow, so that because that's the best way to understand it, is start with raw materials, go into work in process, go into finished goods, and then calculate our cost of goods sold. So the first place we're going to start is the raw materials. The given information in A was raw materials purchased were $3,245,000. So let's on our journal entry number 1, debit raw materials of the $3.245 and credit accounts payable for the $3,245. Now, if we look at our T account for raw materials, remember we had a beginning balance. That beginning balance we put right here. That's the $36,000. And our purchases we're going to debit, right? Because we're going to, in a T account, you increase an asset on the debit side. So we're going to put the $3.245 right there. All right, so what's going to be our next journal entry? Remember, we're somehow going to allocate this direct materials, and how we're going to do that. In B, it says that we transferred $3.1 million of direct materials to work in process, and in C, it says we incurred indirect materials costs of $139,000, and so we're going to credit raw materials for those direct materials of 3.1 and indirect materials of 139. So our journal entry number 2, is we're going to debit work in process because direct materials go into work in process. Debit work in process for the 3.1 million, and then we're going to debit manufacturing overhead because remember, manufacturing overhead consists of these indirect costs that we can't necessarily trace, right? So we're going to debit manufacturing overhead for the 139, and we're going to credit inventory for the 3.239, which is the total. And then our T account, that balances because that gives us to the ending balance of 42,000, which was also given in there. So that's our raw materials T account and our raw materials journal entries. Now let's look at the work in process. So the work in process, the first thing is we were given a beginning balance of 72,000. So we put that here in our T account. And then remember, from journal entry number 2, we were going to add 3.1 million. So let's add the 3.1 million. And then in B, we were also given the fact that during the year, total job order direct labor hours of 67,580, costing $1,689,500. Those direct labor, that was the cost of direct labor, so that direct labor must have gone into work in process. So we're going to debit work in process for the direct labor of the $1,689,500, and that's going to be our journal entry. Debit work in process for direct labor of $1,689,500, and then in C, it says we incurred indirect labor costs of $93,000. With those indirect labor costs, we also need to include, we're also going to include in this journal entry number 3, the $93,000. So that total gets us a total salaries. So we're going to debit work in process, debit manufacturing overhead, and then we're going to credit our wages or salaries payable for that total, which is $1,782,500. So that's journal entry number 3. Now, what else happens in work in process? We need to apply manufacturing overhead. Well, before we can apply manufacturing overhead, we need to put all of those costs in. So let's go to the given stuff at C. So during the year, round billing incurred the indirect materials. All right, so we've already put that to manufacturing overhead. We had indirect labor. We've already put that to manufacturing overhead. In addition, during the year, round billing incurred other overhead costs of the insurance, the property taxes, the depreciation, the rent, and utilities. So how are we going to record those? Well, those we need to put all those into manufacturing overhead because eventually we're going to attach them to inventory in work in process. So we're going to debit manufacturing overhead. Debit manufacturing overhead. I've put all those in the journal entry. So the total of those is $293,000. That amount we're going to debit into manufacturing overhead. In addition to manufacturing overhead, remember from journal entry number 2 and journal entry number 3, we put the indirect materials and the indirect labor. So the indirect materials, indirect labor over here in the manufacturing overhead T account, plus the other overhead, that gets us the total manufacturing overhead. Now, how do we apply manufacturing overhead? Well, in a job order costing system, we apply manufacturing overhead based on some cost driver or an allocation base. And remember, that cost driver in this case is direct labor hours. Direct labor hours were given in B. Direct labor hours were 67,580. And they're applied at a rate of $7.50. So, we need to debit work in process for that applied overhead. So the 67,580 times the $7.50, that is equal to our applied overhead. So we're going to put that to work in process. That's journal entry number 5. So applied work in process is 506,850. So we're debit work in process, and we're going to credit manufacturing overhead. And that's the journal entry 5, so we're going to credit for the 506.85. And so now we've got all of our costs and work in process. We've got the direct materials, direct labor, and indirect cost, or other, our manufacturing overhead costs. And then we've taken the journal entries and we've calculated what our manufacturing overhead journal entry is, and the debits and the credits. Now, if you recall the schedule of goods manufactured, the next thing is so we've got the raw materials, we've got the manufacturing costs, put them in the work in process, and now we need to transfer them out of work in process. So let's transfer the costs out of work in process into finished goods. So let's go to the information given at D. It says at January 1, Round Belly had beginning finished goods inventory of 26,500. All right, let's put that in the T account, because similar to the schedule of goods manufactured, we start with our beginning balance, and then we add the cost of manufactured goods, which we know from work in process. We know our beginning balance, we know our ending balance. So the cost, that difference, similar to lesson 1, schedule of goods manufactured, we got our beginning work in process, we add this stuff, we know what our ending balance is, so that difference must have been the total cost of goods manufactured. So that's what we transfer to finished goods. And the total cost of goods manufactured, based on the T account, so for this T account to balance, it's got to be the 5,319,750. So we take that as the cost of goods manufactured. We're going to debit finished goods, and then we're going to credit cost of goods. We're going to credit work in process, and that's our journal entry number 6. Debit finished goods, credit work in process for the 5,319,750. Now, how do we calculate cost of goods sold, right? Because that's the next step. Looking back at lesson 1, the schedule of goods manufactured, we had beginning finished goods, then we add cost of goods manufactured, then we have total cost available for sale, then we have our ending balance, and that if you subtract that, we come up with our cost of goods sold. So let's look at the finished goods T account, and from that T account, we're going to calculate what the finished goods sold is. So we've got beginning balance, we take the cost of goods manufactured, we're given the ending balance. The difference between all those has to be the cost of goods sold. The cost of goods sold is equal to $5,314,350. That's going to be what we sold. And remember, at E, we're giving our sales revenue. So let's calculate, or let's record that journal entry, accounts receivable, sales revenue for the $8,263,400. That's what we're given, and then we calculate the cost of those goods sold. So we're going to debit cost of goods sold for the $5,314,350, and credit finished goods for that same amount. And so that's the journal entry form of the schedule of goods manufactured. Now we had some other information, right? We had non-manufacturing costs, which is a simple debit to sales. Salaries expense for $450,000, and a credit to salary and wages. And then we had advertising expense, which is a debit to advertising expense for $63,000, and a credit to accounts payable. And now, if you recall, so those are all those costs. And if you recall from the other side, we had this thing called under-applied and over-applied overhead. Well, let's look at that. So all of our T accounts balance, right? Well, our T accounts all balance except for this one, manufacturing overhead. As it stands right now, we've applied manufacturing overhead of $506,850. $850. But that wasn't the total costs that were incurred during the year. The total costs that were incurred were that plus the $18,150. And remember, I said we were applying overhead based on the estimated cost of $7.50. Our actual hours were this. Our estimated hourly cost was $7.50. Well, it turns out that estimate was wrong because we're left with a difference, this $18,150, and somehow we need to do something with that, right? And in this case, we've got the cost of goods sold needs to be debited, and remember back to underapplied overhead. Underapplied overhead is when our estimated rate is less than the actual cost, the actual cost. So this was less than, so we need to increase cost of goods sold for that amount, and we need to credit manufacturing overhead, and so that's our adjusting journal entry, because this manufacturing overhead needs to be 0, because we need to somehow attach all of those costs for the period to the inventory. And in this case, we haven't applied all of them. There's a balance of $18,150. And so now we apply that through a journal entry. We debit cost of goods sold, credit manufacturing overhead. Now, if the inverse were true, let's look at this F. Assume the same amount of indirect costs were incurred, but the total number of direct labor hours increased. So if the total number of direct labor hours increased to 73,000 times the $7.50, well, that gets us the $547,500. Now, imagine if we applied the $547,500, if we applied that amount, but actual costs were less than that, well, we applied too much. So we need to reduce how much we applied, and in this case, it's $22,500. So we need to reduce what we applied, and we do that through the debit to manufacturing overhead and a credit cost of goods sold. It's the inverse of the underapplied. All right, the under and overhead applied is a really difficult concept. It took me a while to grasp, but you can walk through these examples. You got the basic journal entries on the other side. We've got an example here that you can walk through. The rest of these, it's the schedule of goods manufactured, but in a journal entry and T-account form. Watch it again. Make sure you understand it mechanically. Make sure you understand it conceptually. But this is how a job order costing system flows. Thank you.